So guys of CPA and the guys who are aspiring, that is, to be CPAs, good afternoon. So it's another time we meet for our session of financial reporting and analysis. Remember, it has been time since we did our last live session. So today, I'm going to look at one of the areas in financial reporting and analysis, and I will be able to tackle the most current question, that is from the most current sitting, which is April 2025, question 4. So we would like to look at a question from April 2025, financial reporting and analysis. Financial reporting and analysis. So that is question number 4. So April 2025, from the financial reporting and analysis paper, financial reporting and analysis paper. So for it to be easier for you guys, for it to be easy for you guys, I will be able to attach the past paper for April 2025 under the chart so that you can be able to access it for easier following. So I will be able to attach a link for that relevant sitting under the chart before I start. So if you check under the chart, I have attached a certain link there. So that link contains the April 2025 past paper. So we are going to look at question number. We are going to look at question number 4 of that sitting. So I will be able to read that question from my end. So I will be able to read that question. So April 2025, financial reporting and analysis. Financial reporting and analysis question 4. We'll be able to do the entire question number 4, including the theory part. So the question reads, that is A, part of it, with reference to International Public Sector Accounting Standards 4, the effect of changes in foreign exchange rates. Explain the term functional currency. Explain the term functional currency. Explain the term functional currency. If you look at this whiteboard, the first part I've explained functional currency. Explanation of the term functional currency. So the term functional currency, under that IPSAS 4, refers to the currency of the primary economic environment in which an entity operates. So currency of the primary economic environment in which an entity operates. It's the currency that mainly influences the entity's cash inflows. It influences what? Entities' cash inflows. So like now, sales, taxes, grants, and also outflows. Example is labor, materials, and operational cost. And we go to B part of it. So B, they are saying, on 1st January 2021, Trends Limited issued 20 million 8% loan notes at a discount of 5%. The issue cost amounted to 1 million. The loan notes were redeemable on 31st December 2024 at a premium of 1,130,000. The effective rate of interest was therefore 12.5% per annum. So required, with suitable calculations, illustrate the accounting treatment of the above transactions from 1st January 2021 to 31st December 2024 in the financial statements of Trend Limited in accordance with International Financial Reporting Standards 9, IFRS 9, Financial Instruments, Recognition and Measurements, around your answers to the nearest 1,000. So here there is a company called Trend. It's issuing 8% loan notes at a nominal value of 20 million. at a discount of 5%. The issue cost amounted to 1 million. The loan was redeemable 2024. So we have 2021, 2022, 2023, 2024. So those are 4 years. At the end of the 4th year, it will be redeemable at a premium of 1,130,000. The effective rate of interest is 12.5% per annum. So you are told that illustrate the accounting treatments of the above transactions for those 4 years in the financial statements of Trent Limited in accordance to IFRS 9. In accordance to IFRS 9. So this is what we will do. And this is what we need to know when doing a question of this kind. It's all about a financial liability. So that is a financial liability. Remember that it was a loan which was being issued. So that is just a financial liability at amortized cost. So we always say that it's initially recognized at net proceeds received. Initially recognized at net proceeds received, that is from the issue, that was 20 million, equal to the fair value less issue cost. So we'll come here and say initial recognition from 1st January. So the nominal value. So remember that they said we do what? We round off to 1,000. So the nominal value is 20,000. The nominal value is 20,000. So remember that it was issued at a discount. You raise discount. You raise a discount. Discount of 5%. 5% of 20,000, that is 1,000. So we have 19,000. So that is the fair value. That is the fair value. Or we say in brackets net proceeds. Net proceeds. So that is 19,000. That is 19,000. So remember that it's initially recognized at the net proceeds received from the issue. That is what we have done, equal to the fair value less issue cost. So we less the issue cost, which was also 1,000. Issue cost. So the issue cost. So issue cost is 1,000. So we remain with 18,000 here. 18,000, which is the fair value less issue cost. So this is the fair value less issue what? Issue costs. So this statement has been recognized here. We said it's initially recognized at net proceeds received from the issue, that is 19, equal to the fair value less issue cost. Less issue cost. Then we'll continue and say, I'd already written the theory, which will be able to assist us in tackling the entire question to avoid time wastage. So, after doing this, we say that subsequently, the liability is measured at amortized cost. Subsequently, the liability is done what? Measured at amortized cost. So that now the 18, where the interest is charged to the profit or loss based on the effective what? Effective rate. That is 12.5. While the interest paid on the nominal value based on the coupon interest rate. Remember the coupon interest rate was 8%. It was an 8% loan note which was issued. So you do what? Where the interest cost is charged to the profit or loss. Remember, we are going to do an extract of statement of profit or loss and statement of financial position. So we have said that where the interest cost is charged to the profit or loss based on the effective rate, that is 12.5%, while the interest paid on the nominal value based on the coupon interest rate, that is the 8%. 8%. So I will come here and do my schedule. I will come here and prepare my schedule. So we have the year. So remember that we have 4 years. Both of them ending December. So year ended 31st December. So 31st December. Year ended 31st December. So the opening liability, remember, is the one we start with in the first year is 18,000. opening liability. This 18, the opening liability. Then the finance cost. The finance cost. So we said finance cost, that is the interest, is charged to the profit or loss based on the effective what? Effective rate. That is the effective rate of interest. So it was 12.5%. So we say finance cost at 12.5%. 12.5%. So after the interest, we consider now the one for coupon. So coupon on the nominal, coupon interest rate on the nominal value, which is 20,000. Coupon interest rate. Coupon interest rate. That one will be the 8% on the nominal. That is what we said. Interest paid on the nominal value based on the coupon interest. So this one I can calculate direct here. 8% of the nominal value. Nominal value is 20 million. So reducing to 1,000, that is 20,000. Then up to that point, we will be able to have a closing what? Closing liability. Closing liability. So remember that this is shillings in thousands. They said we round off that way. Shillings in thousands. Shillings in thousands. And the final year we have shillings in thousands. So we have the first year. That is the year ended 2021. So we have the 18. So finance cost at 12.5% times. So that is 18,000 times 12.5%. So that is 2250. And this one is 1600. Remember that for the 4 years, 2022, 2023, 2024. This one will be 1616. 8% on the nominal. The coupon interest rate, that is on the nominal value. And so you know that this one you reduce. So 18,000 plus 2250 minus 1600. So this one is 18,650. So then now the second year we have a liability of 18,650 times 12.5%. That is 2331. So 18,650 plus 2331 minus 1600. So that is 19,381. Then you have 19,381 times 12.5%. 2423. So 19,381 plus 2423 minus 1600. That is 20,204. Then here we have 20,204. 20,204 times 12.5%. That is 2526. So 2204 plus 2526 minus 1600 is 21,130. So now you do some of the statements. You do some of the extracts. That is statement of profit or loss and what? And the statement of financial position. Statement of profit or loss and statement of what? Statement of financial position. So what are we going to recognize in the statement of profit or loss? So I will come here and say trends limited. Trends limited. Extract of a statement. Extract of statement of profit or loss. Statement of profit or loss. So that is for the year ending. For the year ending 2021. For the year ending 2021. But 2022, 2023, and 2024. So we see that where the interest cost is to be tied to the profit or loss based on the effective interest rate. So this one, the finance cost. So that is an expense. So you come here and say expense. So you come there and say expense, you see the finance cost. Finance cost. So the finance cost is 22.50. We have 23.31. We have 24.23. We have 25.26. That is it for the statement of a profit or loss. Then I will come here and say trends limited. Statement of financial position. Extract of statement of financial position. Extract of statement of financial position. Extract of the statement of financial position. Asset 31st December. As at 31st December. Again, 2021 to 2024. As at 31st December 2021, 2022, 2023, 2024. So for this one, remember that it's a financial liability which we have. So I will come and say liability. So liability. So it's an 8% loan notes, which was done what? Which was issued. So the closing liability by the end is 18 what? First year is 18,650. 19,381. We have 22,04. Then we have 21,130. So we are done with that question. Part A and B. We have done A, that is for April 2025, question 4. We have done A and B. This one was having 8 marks. This one was having what? 8 what? 8 marks. This one was having 8 marks. It was carrying 8 marks. So we can do part B of this question. We can do part B of this question, of which part B of this question we have a retirement benefit scheme. Part B or part C? Part C. Because we have done part A and part B. So part C is all about retirement benefit scheme. It's various statements you are told to prepare there, the retirement benefit schemes. So guys who have joined, remember to share this live session to other platforms. Or you can also share it to your colleagues who can be able to also join and benefit. But other than, remember these sessions, other than the YouTube sessions, we do Zoom classes. Like now today we have financial reporting from 8 p.m. to 10 p.m. So if you want to join, most of you know my number. You call me, you WhatsApp me, we agree on the way forward. So that is my contact. 28 765 46. So if you want to join the Zoom classes, which we do in the evening hours. So let's do part C of the question. Part C of this question. Let's look at part C. What was required? Part C. So part C of the question. What the examiner needed in parts of this question. Huh? Part C, part C. So remember, you already have the question. You have the question under the chart. You have the link. There's a link. So I will read the question. So they said that Airlight Limited operates a pension scheme. He operates a pension scheme. There is someone called Airlight who operates a pension scheme. So that is a company for its employees. By the name Smart Retirement Benefit Scheme. So the following trial balance was extracted from the books for the scheme as at 31st December 2024. So you have a normal contributions. Remember that both the employer and the employer will contribute to the scheme, so that at least at the end of your period in that company, you'll be able to get benefits. So there's no more contributions by Airlight, that is the employer and employees. Then there's transfer in from other schemes. Individual transfers out to other schemes. You are given investment income, property, plant, and equipment, government securities, long term. Members' voluntary contribution is provided. Pension was there. Equity investment, quoted and, so there's the investment they made, the quoted and unquoted. So the shares, in quoted maybe entities and unquoted ones. Unpaid benefits, accumulated funds, 1st January 2024. Accrued expenses is there. Administrative expenses is there. Cash demand deposits, change in market value of the investment. So there was a change in market values of the investment. Lump sum retirement benefits, contribution due in 30 days. So remember that this is a retirement benefit scheme maintained by a company on behalf of its employees. So of change in net assets for Smart Retirement Benefit Scheme. So you do statement of changes in net assets. And also you do what? Smart Retirement Benefit Scheme, statement of net assets. So statement of change in net assets and the statement of net assets. Statement of net. So we start with the statement of change in net assets. 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 So I will come here and say, so remember that this is now, I'm going to do C. So it's called Smart Retirement Benefit Scheme. Retirement Benefit what? Scheme. So the first thing they need is statement of change in net assets. Statement of change in net assets. Statement of change in net assets. So the statement of change in what? Statement of change in net assets. So that is for the year. So for the year ending 31st December. That's 31st December 2024. So you have two columns here, shillings. So shillings in thousands and the shillings in thousands. So statement of changes in net assets. What we will start with is contributions received. What they received, what the scheme received. Contributions received. So if we look at that trial balance given, there's contributions received from employer and from employee. So from employer, the normal one, and from where? From employee. Again, the normal. From employer and employee, the normal. So from employer, I can see under the question is 36,480. 36,480. From employees, the normal one is 18 to 40. But if you check in your trial balance, other than the normal one from employee, there's additional voluntary contribution. Additional voluntary. So the one which they did for voluntarily, the employee, the additional one, which is 4560. So from the employees, so we have the normal and the one which is voluntarily. So 18 to 40 plus 4560. So we have a total of 22,800. From the employee, it was 36,480. Then we go ahead and look any transfer in. Any transfer in. So we have transfer in from other sources. If you look at that trial balance, we have from other sources. We have the one from other sources. So the individual transfer. Individual what? Individual transfer. So the individual transfer is 31 what? 3150. The individual transfer. Then also there is investment income. But that is a transfer in, which is an income. There is an investment income of 47,400. So up to this point, we have a total. So 36,480 plus 22,800 plus 3150 plus 47,400. That is 109,830. 109,830. And now we look at the benefits payable. The one which are being paid by the scheme. Benefits payable. The one going out. Benefits payable. But there is some benefits. Maybe it's, the scheme is paying to maybe the people who have already retired. Like now we have pension. We have pensions. So the pension from the question is 76 what? 7640. That is the pension, the first one. Then there's something I can see called ransom, the one paid once. Ransom, remember, is something paid once. Ransom retirement benefits also. Ransom retirement benefits. I can see it under the trial balance. Ransom retirement benefits of 4820. Other than this, there's individual transfer out to other schemes. Individual transfer. Individual transfer out to other schemes. Out to other schemes. Other schemes. That is 18 what? 1860. So those are some of the benefits payable. So we have a total of We have a total of 14,320. So 109,830 minus answer. We have 95,510. 95,510. The 95,510. Then there's other things which will reduce that figure. So remember that they did an investment, but there was a change in value. There was a change. They call it a change in market value of the investment. So it does reduce this. So change in market value. In market value of the investment. So change in market value of in the investment they made, there was a change in market value. So we have 22,640. And another thing which will reduce this 95,510 is all about an expense which is there, another expense which is there, or with the expense which is there, I can see is administrative expenses. We have administrative expenses of 2840. So 22,640 plus 28,40. So that is 25,480. So that now the change in net assets, there will be 95,510 minus the answer. So that one will be 70,030. So the change in net assets. So that is 5 marks. N5. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Out of the 10, N5. N5, you get your 10 marks. Then go ahead and say smart retirement. Smart retirement benefit scheme. So the next thing they need is all about the statement of what? According to the question, statement of net assets. Statement now of net assets. Statement of net assets. Statement of net assets. So this one is asset. The year was ending on 31st what? Our year is ending on 31st December 2024. So here, we start with assets. We start with assets. We talk about investment assets. We start with the investment assets before we talk we talk about another non-current assets and current. So the investment assets. So they did investment assets on fixed interest securities. Fixed interest securities. Fixed interest what? Securities. That is government. So that's maybe the bonds, huh? The bonds. Fixed interest securities. Bonds or bills. Treasury bills or treasury bonds. Treasury bills or treasury bonds. So the fixed interest securities, you know them. And it's good, by the way. I will do one of the sessions on how the treasury bills and bonds operates. So remember that treasury bills are short-term in nature. Treasury bonds are long-term. Like now, the other day, it was last week, the Central Bank of Kenya floated that whoever wants to bid for bonds, you can. I think the deadline is this week, if I'm not wrong. Maybe next week or this week. So if you want to put your money for 25 years with the Treasury, with the Central Bank of Kenya, then at the end of the period, you will be able to get a good return. You are supposed to check on their website and buy. You buy Treasury bonds. Remember, Treasury bills, that one is done weekly. Yes. So how would you be able to acquire these securities? You have to have a CDS account. You have to have a CDS account. Central Deposit, that is a CDS. Central Depository System account. With an account which is called DHouse CSD. DHouse CSD. DHouse CSD is a current platform which was launched by Central Bank of Kenya the other time. It was this year. If you want to research more, research about DHouse CSD. DHouse CSD. If you want to buy the treasury bills and bonds. Treasury bills and bonds. So I've said right now, if you have millions in your account, there's bonds which you need to bid. Meaning the government wants to raise money domestically so that you can be able to finance its own budget. So these bonds, which it already floated. I think the deadline is even not this week, next week. But for treasury bills, remember these are shorter. The minimum amount you can start with is 50,000. You put some money there. You know that the government securities are secure. You can't lose your money. Even if yes, the interest is not that huge, it's a low risk investment. So that is a class for another day. If you want more insight on these bills and bonds, you can talk to me. So I've interacted with them for quite a time. I know. So let's finish this question for now. We were doing a financial reporting. We are not talking about treasury bills and bonds. I was just explaining when these arise that investments, assets, they did investment in fixed interest securities. This is where money is nowadays for guys who have money. So fixed interest securities government for the government. So that it was 263. This guy they put 263 million. 263, 605. Then there was also an investment asset which is there. I can see they did equity. In fact, also you can buy shares. You know, shares operate with NSE. And I will do one for now. Let's finish this question. I will do another video about investments where you can be able to understand on best areas where you can invest. Remember that you can invest in SACCOs. We have MMF. We have these NSE where you can buy shares. You can buy treasury bills and bonds with the central bank. I will do a session of that kind. So, equity investments. So, equity investments. So, we have the quoted, according to the question, quoted securities and unquoted. So, for the quoted, I can see it's 87, 835, and for the quoted is 19,990. 19,990. So 87, 835 plus 19,990. So that is 107, 825. 107, 825. 25. Then there was cash. Another thing is cash and the demand deposits. And the demand deposits. So we have the cash and demand deposits of 23,460. Cash and the demand deposits. So up to that point, we have a total of 263, 605 plus 107, 825 plus 23, 460. That is 394, 890. And now you can talk of other non-current. We can talk about other non-current what? Non-current assets. What is other non-current assets they invested in or they hold? Other non-current assets. Remember the one we started with is investment assets. We started by mentioning about investment assets. We have other non-current assets with in the entity, like now property, plant, and equipment, where we have the likes of buildings, likes of machinery, like motor vehicle and others. So property, plant, and equipment. So the property, plant, and equipment. So that is 132,320. That is the only one. Then we have current assets. So current assets, there are some contributions which are due in short period. That is, I can see in that balance there is contributions due in 30 days. during 30 days. They will be received to the scheme. Those are current assets. Contributions due in 30 what? In 30 days. That is 49 what? 49.40. So if we add 132, 320 plus 49, 40, 8532, 150. So total assets 532, 150. So I decided to do this topic because I know it challenges many students, but it's a simple one. It's a simple one. It's a simple one. That IFRS 9 and these how to prepare these statements for retirement schemes. It challenges a lot of many students, but it's a very simple question. Very simple question. It's a simple one. Just understanding how those statements are done. Then now we continue with capital and liabilities. Capital and liabilities. The capital and liabilities. So accumulated funds. So from the question, I can see some accumulated fund. So some accumulated funds, that is 461,560. 461,560. Then add the change for the year. Add net, the one we did from our first statement. Net change for the year. Net change for this. The net change for the year is this one. The one from our first statement. The net change for the year. So 461,560 plus 70, 030. So that is 531. That is 531, 590. 531, 590. And now current liabilities, because I cannot see non-current liabilities. Current liabilities, short term. The current liabilities, I can see the unpaid benefits. There's some benefits which are unpaid. Unpaid benefits of 320. I'm sharing 7,000 and sharing 7,000. So unpaid benefits, that is 320. And also the accrued expenses. Expenses which are not yet paid. Those are liabilities. Accrued expenses. The accrued expenses of 240. So these are total 560. These are total 560. That is a total of 560. So up to that point, 531, 590 plus 560. I'm capable of getting 5. So total capital and liabilities. Total capital and liabilities is same as total assets of 532, 150. You can see it's balancing. It's balancing at 532, 150, 532, 150. Also, this one they were marking at any what? Any 5. 1, 2, 3, 4, 5, 6, 7, 8, 9. Any 5. So out of the 10, so no, they were saying yes, any 5. The marking, yes, any. It's 10 entries or what? Yes, it's any. This one was marked any 10 times a half. Wait, you are 5. Not any. It's not any 5, but out of the 10, they multiply by half. You get your 10. Anyway, the main thing was all about understanding how these statements are prepared. How these statements are prepared. For which we have done the statement of changes in net assets for the retirement benefit schemes and the statement of net assets for the retirement schemes. So I have said that, guys, I always do what? Online classes. I always do online classes. We have online classes. So in these online classes, you will be able to get what? Pre-recorded videos. Pre-recorded videos. Get my lecture notes. And also you attend now the online class. Under these online, the classes. So the online classes itself. So pre-recorded videos, lecture notes, and the Zoom sessions. Live, Zoom sessions. The live Zoom sessions. Live Zoom sessions. So my number is this. If you want to join, you do what? You message me. Through this number. You call me through this number. You call me through that number. So we can agree on the way forward. 07, that is a plus 254. That is the code of Kenya. 2547 2876546. That is my number. So what I can say is that thank you for attending this live session. Thank you for attending this live session. Next, we'll be meeting for other sessions. Because already, I think in this April 2025, I've already tackled question number 5. We have done question number what? Number 5. Yes, the computational part of it, because it was the preparations of cash flow statements. That one I did. So we have done question number 4. Have we done question number 3? Yes, we tackled number 3. We tackled number 3. So tomorrow I will be doing question number 2. Then over the weekend we do question number 1. And I will be done with the entire paper. I will done with the entire paper for this city. I will be done with the entire paper. Hi, someone I think who has seen my live, and calls are coming in from time to time. That is why you can say I'm a bit distracted. So we have come to the end of the live session today. We meet tomorrow from 3 p.m. when I will be doing question number 2. Question number 2 is based on financial analysis. The question number 2 is all about financial analysis. How you analyze statements using the common size method. So there's that use of vertical and horizontal method to analyze your relevant statement. So I will be able to tackle that question tomorrow. That is question number 2, April 2025. April 2025. April 2025. Thank you for attending today's session. Also, what you can do is consider joining the Zoom online classes. So there's a lot of benefits here. Because here, that is where the syllabus is covered. This is where we cover the syllabus itself. This is where we cover the syllabus itself. This is where we cover the syllabus itself. Where we do where we do all the topics. We do the introduction and we do illustrations. So see you tomorrow. Thank you.